Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. It's 2026, March 2nd, and today's vibe is oil is doing parkour, stocks are doing a trust fall, and safe haven is acting complicated.
My portfolio opened the app and immediately asked for a wellness check. Also, can we talk about how the market hears Middle East escalation and instantly turns into a fainting Victorian child?
We'll make it practical. 3 big threads. 1. Oil surging on the Iran conflict and Hormuz disruption fears. 2. Stocks down and the dollar up while bonds don't fully play hero. 3. A sharp pivot to growth. Nvidia investing $4 billion across 2 Photonics companies to bolster AI processors.
So it's like, gasoline is expensive, my index fund is sad, but somewhere a data center is getting a glow-up with fancy laser cables.
Story 1. Oil. Multiple market wraps today point to crude surging sharply as strikes intensify across the Middle East and traders price disruption risk around the Strait of Hormuz, an oil choke point that normally handles roughly a fifth of the world's oil flows.
A fifth of the world's oil going through one narrow hallway is the most "we designed the global economy on a napkin" thing I've ever heard.
Simple version, oil is like the delivery fee for everything. If the route looks risky, insurers charge more, shippers reroute, and the price of the delivery fee spikes before the physical shortage even shows up.
So it's basically Uber surge pricing, but for the entire planet, and the driver is a supertanker.
Exactly. And we're seeing second-order effects too. Reports note shipping costs soaring, and even war risk coverage being pulled for ships entering the Persian Gulf, meaning fewer ships willing to take the trip at any price.
When insurers say no thanks, that's not a red flag. That's the whole red carpet rolled out, straight into chaos.
Why it matters for normal people. Gas and diesel can move quickly, and if high oil prices persist, food and household goods follow, because trucking, packaging, and production all embed energy costs. It's inflation by 1,000 receipts.
Nothing says macroeconomics like paying extra for strawberries and being told it's because a shipping lane is having a bad week.
Story 2. Markets. Headlines today describe stocks slumping while oil and the dollar jump. The key point, an oil shock can be both growth negative and inflation positive. So the usual buy bonds, everything's fine playbook can get messy.
Bonds tried to be the responsible adult, but inflation walked in and said, not today.
Think of it like this. If the economy is a car, recession risk is the engine stalling. Bonds usually help. But an oil shock is also like someone turning up the heat under the hood. That can push prices up even while the car slows down.
So we're driving slower, but the dashboard is also on fire? Cool. Very relaxing asset allocation environment.
Actionable angle. Stress test your budget and portfolio for a higher for longer energy scenario. If you're heavy in sectors that get squeezed by fuel, think airlines, shipping users, some consumer discretionary, know that margins can compress fast.
And if you're a frequent flyer, this is the part where you go from points hacker to points historian, documenting the era when flights were affordable.
That leads right into a related headline. Travel stocks sinking after thousands of flights are grounded following Iran strikes. When flight networks get disrupted, revenue drops, costs rise, and investors instantly reprice the risk.
Airlines already run on vibes and thin margins. Add jet fuel spikes and airspace issues, and suddenly the business model is just, please clap.
Story 3. The growth counterweight. Nvidia is reportedly investing $4 billion total, $2 billion each, into 2 Photonics companies, Coherent and Lumentum, to bolster AI processors. This is about the plumbing behind AI at scale, moving data faster with light.
Finally, a story where the headline number is big and the vibe is optimistic. It's like Nvidia looked at the internet and said, we need more lanes on the AI highway, and also make the lanes lasers.
Simple version. AI training is not just chips. It's chips plus networking. If GPUs are the chefs, the network is the kitchen pass. Photonics, Optical interconnects helps move huge amounts of data with less heat and potentially better efficiency than purely electrical connections over distance.
So the AI isn't thinking slowly, it's just stuck waiting for its group chat to load. And Nvidia is paying $4 billion to fix the Wi-Fi.
Why it matters to investors. It signals continued urgency in AI capex and supply chain control. Nvidia isn't only selling picks and shovels, it's trying to make sure the shovel factory can keep up, especially in components that could become bottlenecks.
It's vertical integration, but make it glow. Also, if you're wondering whether AI is over, Nvidia just wrote a check the size of a small country's feelings.
Quick recap for 2026, March 2nd. Energy shock risk is pushing oil up and pressuring stocks. The dollar is catching a bid. Bonds may not perfectly hedge if inflation expectations rise, and Nvidia's Photonics investments highlight that the AI build-out is still very much in motion.
Your homework? Check your spending categories for fuel sensitivity. Don't panic trade your retirement. And if you're booking travel, maybe choose refundable, like your peace depends on it, because it does.
If this helped, subscribe and share BD Daily Finance News Podcast, and drop a comment. Are you treating this as a short-term volatility spike or a regime shift toward higher energy risk premiums?
And if your strategy is, I'll just manifest lower oil, please manifest it loudly. See you tomorrow.